Good morning, guys. Welcome back to another pre-market analysis live stream. This is Franco with Trading Futures Live. Welcome back. All right. Let's review what we can expect for today's trading day. Right? Here's our schedule. Like every day, we will review economic news. The dollar index, very important and very volatile nowadays. The bond yields, the VIX chart, crude oil and metals, the ES and Q and RTY, and then we'll go over Apple real quick. Okay. All right, with that being said, let's jump right into the economic news. Let me get rid of this. There we go. All right, let's go over the economic news right here. All right, we do have wholesale inventories month over month at 10 a.m. Then we have a couple of Fed speakers, Waller and FOMC member George speaks at 12. So it's at 12. Both of them are going to. And these the commitment of traders comes out at 3 in the afternoon. The CFTC position, those are very, very good to look at. Now, this is very lagging data. This is from last week and up to, I think it's Tuesday, but it's a good data to have, though. I certainly check them out every week. Okay. All right. So let's go to the chart of the dollar, right? So the dollar is being very volatile these days. This is a daily chart. If you see, we did have a demand, right, that we were expecting to work, but it failed yesterday. So this is the big picture. So overall, the dollar is going up. Now we're testing this pivot. Now, this pivot is not like if you watch it in the lower time frame. This pivot is huge, right? We did have a nice retracement to the downside from 108 to 105, right? And that makes this pivot very, very strong. We did not have a strong breakout to the upside, but we know we are in a supply from 2002. So it's natural that we will encounter this type of behavior on the dollar, like 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days in this range. And then we broke out. Now we're coming back to the same area. Now, I do expect this a sideways movement to hold, but this sideways movement is huge. I do have a demand at 108 and another one at 775, right? So those are my two demands that I have on the lower time frame. So let's review them on a lower time frame type of price action for today's trading session, right? And I want to say the markets are going up, right? They're gapping up like 1%. And I do have one scenario for the breakout long, and it's only just one possibility. It has to be before 9:45. And if the dollar comes back to this supply, like 109.30, if the dollar is right here when the market opens and the market has a sustained momentum to the upside, then I will be playing the breakout to the upside. That's for me, it's probably like 2 to 4% of the times that happens. Today has a good possibility because the dollar is dropping. It created some sort of supplies that have been tested. Like I have this one created at Asia. During Asia session, and I do have the open from yesterday, the gap down right here. Okay, so that's one likely scenario. If the dollar just stays choppy and comes back down here, then the market, I don't think the market will have more upside because this will put some buying pressure on the dollar, and most likely the more probability is that the market probably could retrace back down. Okay, so now the market is responding to the dollar movement. The dollar is going up a little bit right here. I don't know if you guys can notice this. All right, there you go. The dollar is retracing to the upside a little bit, and the market is giving up some of its gain. It's not much. It's not much. It's like 67. Oh, this is nothing. It's like 15 points or something. But I like to sense the coherence, how they are correlated for today's trading session, right? So yeah, the market is responding correctly to the dollar, because sometimes it's erratic. Like the market correlates to the dollar 82%. So they are inversely correlated at 82%. It's not 100%. That means that sometimes the dollar goes up and the market goes up. I want to be clear about that. For those interested to find that number, you can go to mrci.com, and you can search on the search bar like asset correlation or future asset correlations. That's a pretty good resource. Good morning, Rich. Daily SMA on the NQ. Yes, but I think that has been tested and now is breaking to the upside, so I wouldn't rely too much on that. I do not use them on my trading, but I know they put some pressure on a lot of algos trade off of the moving averages and whatnot. All right, so let's continue here. All right, let's go to the let's go to the bond yields. Bond yields, they did move yesterday. I'm sorry about this chart. It's very messy. So I do have this resistance point. My supply, the best part of the supply is 3.386. Now the bond yields are giving up some of its gains. So this type of behavior is natural. I do think that bond yields have more upside here. And I'll tell you, after 3.5, there's not much to the left. So it's kind of scary. So I hope this thing holds. Because if the bond yields just continue to go up, we're gonna get in big trouble. I mean, the economy and the markets and so on. All right, so let's go to the VIX. Very interesting charts. Very interesting chart for the VIX. We were expecting this thing to continue to go up, but it came to a resistance. Actually, yesterday we marked off this in the pre-market. This supply right here, and is working very nicely, and the VIX is coming down, hence the market is going up. Now I want to be careful on this demand. Actually, right there where it is at is a point that I want to be careful, right? Because I do have this draw-based rally, and such a big rally right here, then probably a lot of people are watching this point right there. If not, my demand starts at 2230. Yeah, let's go to the lower time frame just to see what happens here. All right, so yesterday we did have this supply. It was tested during the trading session and then never revisited again. It just came back down. For today, like I've said, this double bottom type of movement, and then a a nice spike at 10 in the morning. I think this was a Jackson Hole speech for Jerome Powell, probably. So I want to be careful right here. Okay, let's be careful. All right, if not, the demand is down here, is not far. It's just right there. I don't want to be overly bearish, even though I know the daily trend is bearish, but we're so close to demand. Like, demand is right there. The daily and weekly patterns that I have right below, like 12,000, like 11,900 on the NQ are very, very bullish. So I don't want to be caught just trading short. I want to be open to new possibilities, right? I know everybody, all the news outlets are just talking about recession and bear market and the world is going to end. But I just want to be objective and trade whatever the chart is telling me and make money, period. The rest is another story. I don't want to be influenced by that. So the VIX is dropping. That's bullish. And obviously the market are gapping up 1%. So let's see how this react. Now the VIX is approaching to demand. So that changes the narrative here. That changes the narrative, because if the VIX starts to go up, it's going to be a signal that the market is selling off a little bit. All right, so let's go to crude oil. Crude oil, we hit our demand right here at 82 and it's working pretty nicely. Now, the market is just opening right now. I said in the live stream, the pre-market yesterday, these are very important pivots. If crude oil is going to continue going down, these pivots need to work. If not, my supply is up here 91. I do think that's a possibility. If you see the type of price action on crude oil is not collapsing in couple candles, it's been very, very sideways and very slow grind to the downside. But I say 80 is a number that is a very important number. We do have this type of this pivot that was created here before the war in Ukraine. So this is already people that are in crude oil. All these people were created before the war, and then when the war came, we had an explosion to the upside. But we still fundamentally, I think this is a pivot that it will put some pressure on crude oil prices, right? All right, so continue. Metals. The metals should be going up because of the dollar. But if you notice here, silver, which is the more volatile, is just 1%. Gold is 0.5%. So the dollar is dropping, and metals are not going up. So this tells me that one of them is going to change. Either the dollar is going to change to the upside, or metals are going to go down. Or metals are going to go up, right? So I want to be aware today on the metals. I don't follow them. I haven't been following so closely later, but I want to, since the dollar is dropping and this thing is not moving, I want to see if this thing tells me where the dollar might go, right? If this thing just go up and the dollar stays where it is at, so I do think the dollar will have more downside later, right? So I want to check their correlations. Same for every commodity. If you see copper, just 1%, lumber 3% more, like volatile a little bit. All right, so with that, let's go to the ES. All right, so it's a very messy chart though. All right, this is the ES. I do have a gap up right here. I want to point out that Trading View just rolled over my chart, and I don't want to. Let's make a pause and talk about rollover real quick. So futures is a derivative contract, right? Derived from whatever the stock index is doing, right? The spot market, the cash market. So being a derivative is a contract that has expiration. It expires for instance, in the case of the equity market, it expires every 4 months, right? So every 4 months happens in March, June, September, and December, right? So when the expiration period comes, a lot of platforms just put you automatically into the new contract. The new contract is the one that is going to be traded next. In this case, we're in September. It's going to expire in September. So the next contract that comes is the December contract, right? So a lot of platforms, like 7 days prior or 15 days prior, but is an algorithm that they have regarding time. But I do like to trade the current month based on the volume. I don't want to get into the December contract if the volume is very low. I want to be clear about that. So how do I check which one is the one that I want to be traded? So there are several things that you could do. The one that I like to do is more precise for me in TradeStation. I just put the two contracts on a screener. Let's say I do have ESU22, right? That's the contract for September. And then I have ESZ22, which is a contract for December, right? And the one that has more volume, that's the one that I'm going to be trading, right? So, but if you don't have TradeStation, you can do even here, right? And add ESU22, right? Why it doesn't show up here? Oh, there you go. So you do this. Oh, it's 2022. So you add USU 2022, right? And you can put here volume, right? And you see how much volume does this thing has, right? It's 21,500 contracts, right? So then you add another contract, you go to ES, right? You open up this thing, this arrow, and you come here and type in the ESZ 2022, which is the December contract, right? So you add it here. And then you should have it right there. There you go. So you guys can see how their price is different. Number one, that's why this is showing a gap up, right? This price is different and the volume is a lot lower. So I don't want to trade the December contract yet. So I want to stick to the U, right? So what I'm going to do is, instead of just the platform, to let the platform to choose what I'm going to trade right here, I'm going to watch. I'm going to type in ESU 2022. And you might need to do this for a couple days till Tuesday. Another thing that you can do is go to the CME group website and you can see the settlements, right? You can see the volume, estimated volume, 400,000 contracts, whereas the September has a 2,300,000. So I will stick to the September contract still, and I will be checking this through next week. Most likely that we will be trading the U contract, meaning the September contract, for the next week, probably till Wednesday, Thursday, and then Friday is probably the no trading day for me, when the actual rollover, when the volume is paired and the market is not volatile, etc. Right? All right. If that is clear, so let's go back to the charts. Yes, U 2022, right? I want to be careful here on the ES because I do have some sort of supply right here. 9:30. So this candle was created at 9:30. Let me get rid of all these lines. I don't use fibs, but sometimes this thing gets messed up. All right, so I do have that. We are actually in that supply, so we haven't broken it yet, right? We haven't broken this supply yet, so I want to be aware of that, right? If we break to the upside here, everything I have is overnight, 6 a.m. Here is 12 or noon, whatever. I do like 4100, but it's far. I don't think it's gonna come into play today. And for the to the long side, I do have all these chop from yesterday, right before the close. So I will be aware of this, right? So I do think there is a possibility for a breakout if the dollar is in supply and we have sustained momentum, right? Then later after, we should expect a retracement and a continuation to the upside. If the dollar continues to the downside. For the bearish case, which is for me not the high probability day today, I do think we can come back to the chop, come back here, and then collapse if we're gonna do it. But it's Friday. The week is kind of sideways. I don't expect too much. We don't have news reports coming out. We have a couple of FOMC members. They have had different speeches. Like Powell is saying one thing, the other ones are saying another thing. So the market is reacting very, very weird to those speeches, right? So, all right, so that's the ES. So if you're just joined us, please be careful with the rollover. Today we're trading the the September contract, right? So this, even though we gapped up here because of the rollover, let's go to the U contract. So this is the exactly same supply that is in the ES, right? So let's type in NQU 2022. There we go. All right, we're just tapping it, right? We're just tapping this supply. Okay, we came here a few days ago, and then we're back into this thing. Now, what I don't like is that we broke this type of downtrend or bear flag type of patterns, like stair step down patterns, right? Now we broke to the upside. I do think these pivots will put some pressure into the buying direction, right? I think the chop from yesterday will put some type of pressure right here. So that is my case for the NQ. I do think, again, we do have a breakout scenario. Now this thing has to come here. So not the NQ for me. Not the NQ has a breakout because the supply is still. It's not fresh because it was touched 1, 2, 3 times. This is the 4th time, and it's not fresh, so it has certainly weakened, but price hasn't come inside. Like here, probably pre-market, and here was in regular trading hours, right? So we could expect something right like this. and then a breakout. So it's yet to see. Interest rates are going down, so that means if they continue to go down, that usually puts the NQ in a very strong position compared to the other equity markets. And I've told this numerous times. When interest rates are going down, all these unicorns and startups that need finance for their operations, they get bought by investors because they get their finance cheaper. So every time interest rates go down, if the market is going up, NQ is usually the strongest market. Whereas if the market is going down and the interest rates are going up, NQ is usually the weakest one, right? All right, so be careful with this supply. There is a breakout scenario on the ES is more likely than in the NQ, but let's see how this goes when the market opens. Dollar's dropping. If the dollar is in supply, then we could if the dollar is in supply when the market opens, then we could expect some more upside. All right, the RTY, we came here to the demand yesterday. We retested it and then we went up. Now this pivot, for me, the RTY has the most bullish case of all. Like we actually were coming down sharply right here, right? And we broke to the downside. We broke to the downside, then we're breaking to the upside retest. This is textbook setup, right? So I do expect if the market just come down to this pivot might put some pressure to the upside. All right, so that's I am biased to the long side. That's the reality. Not because of the market going up on the pre-market, but more like the overall structure, price structure is more favorable to the upside. I do think I might find some supply around here. We're so far away. I don't think it's gonna come into play today. We'll see. Let's check real quick on Apple. What happened to Apple yesterday? I haven't checked this chart. All right, so still the demand was more like the demand is no. This is Amazon. Sorry. Let's go to Apple. All right, so the demand's still holding, and we're gapping up today into, guess, the same supply. So let's see if this supply is gonna actually work. I don't think it's gonna work. If you see Apple's chart, 1, 2 eyes, and then it collapsed and it holds, right? So let's see. We haven't collapsed here. Yesterday, yes, we went down, but we managed to hold this demand. A lot of buyers in Apple stock. We're gapping up to the supply. Let's see how Apple reacts when the market opens. But I do expect Apple a continuation to 159. If this supply continues to hold, then I don't think this demand will work. We need some more volatility. That means 150, 1.75 for me. If Apple just come down from the open, that will mean a downside for the equity market, which I don't think is very likely. This has been tested already very much. And the location is not the best. If you tell me this one, then yes, but the location here is so close to the demand, I don't think sellers are willing to sell right here. I don't know. That's just me, right? So with that, I'm gonna wrap up this video. If you like it, please like, subscribe, and share so we can grow the channel. And I see you guys in 10 minutes. Thank you.